Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review or good morning market review of the European indices on Thursday, 12th of November 2015. Okay, let's try and decipher exactly what's happening here. Basically, the overwhelming movement this morning really is the fact that, even given the fact that Asian markets were more or less flat, it's all about Mr. Draghi and his speech. Okay, so I'm just going to read out a few snippets of what he said this morning. Okay. Mr. Draghi, not short of instruments to meet inflation target. Dovish. Okay. Let's read a few more. Audi sales in October rise. That's okay, that's good. So therefore, okay. So ECB's Draghi, not short of instruments to meet inflation target. Dovish. Okay. Revision to previous reading. Blah 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 blah. Recovery in euro area is slow, is stronger than before. Monetary policy is proving effective. Okay, the only real hawkish or bearish thing that I'm reading, or bearish comment that I'm reading so far, is the lower rates for too long provide fertile ground for financial instability, should we say. Okay, financial stability risk must be monitored. So that's probably the only bearish real rhetoric that I've seen thus far. Now, let's just continue to read. Euro falls, a Draghi hits more stimulus. I mean, that certainly is the overwhelming article. Euro fell against the dollar this morning after central bank Mario Draghi strengthened speculation the bank is preparing to fire its third bazooka to further kickstart the sluggish economy. Blah, 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 blah. Downside risks from global growth, blah, 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 blah. Inflation dynamics are more weakened, and therefore he needs to do more QE. That basically is the summary. There's nothing really more than that you can actually state. It basically means that he's going to continue firing his QE bazooka, and that means weaker euro, and that means higher European equity markets. There's no other way of seeing it. Okay, see signs, core inflation turnaround somewhat weakened, downside risks to economy, monetary policy to re-examine at meeting, can use other tools to strengthen QE impact, blah, 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 blah. So basically, it's QE's on the docket, and the weaker euro is here to stay. Okay, it's very hard to see anything else other than that speech. The only, like I said, bearish rhetoric was him talking about weaker or lower euro or lower rates, obviously causing financial instability risks, etc., etc. So that really was the only bearish article or bearish news flow that I could read out of that. Okay, now what's going to happen? Let's have a look at the actual markets then from a technical perspective. Okay, let's bring up the chart of the German DAX, given the fact that it's the leader in Europe. You can see here that we have put in a triple top on the German DAX itself. You do have this topping tail above, but given the fact that you've had QE, and we all know QE trumps all bearish rhetoric, then you are, or bearish news flow, etc., and you are looking at potential flush now, a potential rally in the markets itself. Now, the German market did put a doji candle, as you can see here, on the 8 o'clock candle, 60 minutes, and you can certainly see weakness here on the pivot. You can see basically insecurity, basically indecision. Really, that's probably the best way of describing this candle here on the 60-minute chart, where we flush on the downside and flush on the upside as well on the German DAX. Now, ultimately, given the fact that you've had Mr. Draghi talking about QE, etc., etc., it's all equity market supportive. That's probably the best way of understanding it from my perspective anyway, other than the fact that he certainly opened the door for more QE, and that certainly remains the overriding and overwhelming theme from my perspective. Now, the 10-minute chart on the German DAX itself is obviously coming back into support now. We had this inverted head and shoulders, and that obviously played out pretty impressively, although I didn't expect that. And you are looking at potential support on the German DAX to hold, given the fact that you've got gap fill support here. Okay, so it's all about gap fill support on the German DAX in the interim. Okay, from my perspective. Now, the daily chart itself, yes, you do have this bearish bear flag type formation, but given the fact that you have this unfilled gap above at 11,290, that certainly remains vulnerable to being closed, or not vulnerable, but certainly is an opportunity for the German DAX to continue higher based on this weakness and this theme of QE from Mr. Draghi. Now, the cross-reference and cross-verify with the MDAX certainly has flushed as of late, and certainly is seeing weakness, but on the 60-minute chart you can clearly see that we are now coming into support on the MDAX. Tech all shares certainly have put in a potential doji, but the rally certainly continues. We are struggling at this 2130 level, but we need to remain open-minded to 2160 as well. On the 60-minute chart, again, you are coming into horizontal support, so certainly all eyes in there. There is an unfilled gap below, again, so that certainly does exercise some caution with regards to the market itself. But on the 10-minute chart, you can clearly see that we are now back into horizontal support on the actual tech all share. Now this is obviously corresponding with the actual Nasdaq itself as well. The Nasdaq certainly has support, currently trading at 46.30, 130 region, and you have put in a potential bottom here around the 46.30 on the Nasdaq. Now you do have this unfilled gap on the Nasdaq at 47.10, so again certainly prone or privy to closing that as well. So all eyes on that gap above at 47.10 on the Nasdaq itself. Okay. Now let's cross verify that with the French CAC and let's see exactly where this is trading. The French CAC certainly has pushed lower and closed that gap. We are now coming into horizontal support on the French CAC 2. It certainly is are looking at a potential HNS formation, which was negated. I was bearish in the morning, but we certainly negated that very quickly. So that certainly is out of the equation now. Obviously gap fill support really is the overriding theme, and Mr. Draghi's QE promise certainly remains the dominant thought process at present. Now, in terms of the French CAC at the moment, again, like I said, you do have support at this 4900 level. Looking at the chart of Euro stocks, so Euro stocks again coming into gap fill support, or should we say horizontal support. You do have horizontal support further down. So again, 3420 key level of support on the Euro stocks itself. The 60-minute chart, again, you do have this indecision candle, bottoming tail low, and then you are looking at a potential thrust higher. The daily chart on the Euro stocks, again, you do have this bearish and go for bearish price action formation, but given Mr. Draghi's QE speech, it's very hard to envisage that obviously playing out. The 200 MA certainly does seem to be resistance in the interim, but you do have an unfilled gap above, and don't be surprised if you move higher to go and attempt to close that gap. Really, it's all about gap fill above. Okay, especially given the QE obviously saga continues. And always be mindful that there is a inverted head and shoulders target, and the target certainly remains gap as well. So bear that in mind. Okay, so again, you must remain open-minded. So your left shoulder is here, your your headline is there, or neckline is there. So your head, should I say, is there. Your right shoulder is here. Then obviously off we go to the races, and you got your target ultimately is going to be gap fill above, and gap fill is currently at 3600. Okay, on the Euro stocks itself. Now, all eyes on commodities. Oil itself, which I have shown on my FTSE chart, is now into support, and therefore it's very hard, given the fact that FTSE is into support, to start to obviously adopt a bearish stance. It's very hard to certainly adopt that. Okay, especially given the fact that the FTSE daily chart as well, on the 60-minute chart, you can certainly see is obviously into that key support zone. It's very hard to be bearish on equities at this juncture, especially when markets are now into support. So oil is certainly into support, copper is into support. Let's break down the actual sectors now. The automobile sector, you can see, is into gap fill support again, into that 200 MA support. So certainly looking for a potential bounce on the automobile sector. The German banks certainly have had weakness today. We did have a certain bank reporting weakness as well. Now we do have horizontal support seen here on the actual banking sector. Now obviously you can see a inverted head and shoulders formation potentially forming on the banking sector as well. Retail sector certainly weak, although you are coming into gap fill support on the retail sector. So certainly the bearish argument certainly seems to have been priced in there at this juncture. Okay, the green haven, which is the commodity sector, you can see is languishing at the lows, but it's all about the dollar itself at present. And if we can see weakness in the dollar, we'll see strength in commodities as well. Now again, Euro stocks, given the, or should we say the Euro stocks itself, again going back to there on the 10-minute chart, again it's all about Mr. Draghi and QE, and therefore I'm expecting a thrust higher. QE wins the day, and obviously the Euro USD will certainly start to push lower. If I look at the chart of the Euro USD, yes, we had a pivot low of 106.90, and that should certainly continue. I can't see why Mr. Draghi's speech would be hawkish in any way. And you are looking at a bear flag forming here, and then the inevitable, which is going to be 1.06, 1.05 on the euro, and that obviously helps equities as well. Okay, so the overriding theme, Mr. Draghi dovish, and obviously the euro weak, and therefore European equities should move higher. And that certainly seems to be the situation. Now he's also talked about 2016 and beyond in terms of key QE. So again, certainly looking bearish in terms of the market. Okay, I think that's a wrap. I think the overriding theme is QE. Euphoria is here to stay. Be sure to visit cfds.com for your trading needs, and certainly inquire about the products and services on offer. Goodbye now.